What's up? Welcome to Blockchain Tech and Finance News on Sundays. There's going to be a short news overview, so please do subscribe, and we'll go right into it. I'm going to be reading some of the news today, going through the market cap on top 10 cryptocurrencies. So, without further ado, go right on into it. All right, so we've got Bitcoin. Bitcoin's at $9,117.18, down 0.72% today. So far, Ethereum in number two, $233.87, down 0.60%. Tether, a stable coin, in at third, 99 cents, what usually floats around $1, 0.27%. XRP in fourth at 19 cents, just shy under 20 cents, down 0.93%. And Bitcoin Cash in fifth at $222, down 1.60%. So those are the top 5 cryptocurrencies. Below that is Cardano, Bitcoin SV, Binance Coin, Chainlink, and Litecoin. And so go right on to some stock, Wall Street finance news. We have Wall Street Journal, powerful force. Tesla's momentum leads stock market surge. So investors favor shares that have risen sharply in recent weeks, like the electric automaker and vaccine makers, worrying skeptics who think the rally has gone too far. So this article is from, like I said, Wall Street Journal from Amaranth. And I'll have all these, I will have all of these article links in the recap of this. So Eric Perkins, I was gonna let me read the whole story. I wants me to sign in, so I'm not signed into this. See if I can find this article. We'll grab it over from Fox Business. So this is ported in from Wall Street Journal. So Eric Perkins believes Tesla Incorporated shares have climbed too quickly to heights the company's earnings can't sustain. This guy still isn't selling, but a 44-year-old living outside San Diego, Mr. Perkins, says he normally would sell to lock in a profit when a stock quadruples in 4 months, but after missing past Tesla rallies, he's determined to hold on to his shares, which now make up to about half of his roughly 1 million portfolio. So $1 million portfolio. He says he has.
At
Close this crap
$489.60.
over here. So I don't see anything stopping the momentum, at least until earnings are announced, said Mr. Perkins, who drives the Tesla Model X. The electric automaker reports second quarter earnings on Wednesday. Shares hit a record of 1,546 this past Wednesday, giving Tesla a market value of $287 billion, higher than that of titans like Intel Corp and Home Depot Incorporated. Tesla is one of a handful of stocks whose recent surge continues to power the broader market higher. These companies like tech stalwart Amazon Incorporated and vaccine maker Moderna Incorporated have lifted the Nasdaq Composite to fresh records recently and helped push the S&P 500 up 44% from a multi-year low hit in March. So some momentum stocks like Tesla have yet to record a full year of profit, but their future potential and recent stock performance have still attracted hordes of buyers in recent weeks. Many of the investments are mainstays for individuals like using apps like Robinhood. They have increased their trading activity lately, buying all sorts of things that worry professionals, including shares of companies in the brink of bankruptcy. The swings are a concern for analysts who worry that the gains could reverse suddenly, sending major indexes into a tailspin and even destabilizing the economy because of how many investors hold the stock. If it records a fourth consecutive quarterly profit Wednesdays, Tesla could earn inclusion into S&P 500, making it even more widely owned through funds tied to the index and increasing the company's sway over financial markets. So retired fund manager David Rocker worries that big gains in shares of unprofitable companies represent market manipulation excesses in the financial system even more extreme than the late 1990s dot-com bubble. Mr. Rocker was known for short selling, wagering on falling stock prices by borrowing shares, selling them, then aiming to repurchase at lower prices. He argues that the government and central bank stimulus is contributing to the phenomenon, adding a mountain of debt that will eventually hurt the economy. Um, so there's a little bit there. This article go on. Read here. What's this? 34-year-old nurse from Philippines shares a roughly $10,000 portfolio with his wife, concentrated on Netflix Incorporated and vaccine companies like Moderna, Novio Pharmaceuticals Incorporated. He tries to capture short-term gains in stocks based on their trading patterns, so he buys and sells often, particularly when activity in a stock is frenzied and volume rises. The volume, I can ride the momentum, he said, powerful force. So, I mean, that's like kind of like short snippet from a day trader, right? William Bayer began trading stocks in April after receiving a stimulus check from the federal government. So yeah, most definitely you could probably see people taking stimulus monies and investing in stocks. I'm not sure if that's actually helping economically wise because it's not actually buying a Tesla. It's not actually spending on Netflix services like that so much, but more investing into the companies who probably already got bailed out on stimulus money. So I'm not sure that necessarily helps taking stimulus check monies and into actually the economy. But in some due diligence it does. But what exactly, I don't know. I haven't really. I'm not going to spend the time to look into it, but some of you all could. William Bayer. So he took a stimulus check from federal government. 28-year-old in Northfield, Minnesota, has roughly $2,000 portfolio featuring stocks like fuel cell company Plug Power Incorporated, and Chinese electric vehicle maker Nio. And after losing money earlier in the year based on trading based on momentum, Mr. Bayer is now trying to incorporate trends like 5G broadband technology into his strategy. So this is kind of going on basically outside of Tesla's course. Uh, yeah. So I mean, close this article out. So basically, in a nutshell, people are worried that maybe the high gains of what Tesla's seeing right now isn't so much because they're selling a lot of Tesla vehicles, but more people are kind of pumping their money into Tesla stock, saying, "Hey, this is gonna be the next big thing," which is pushing the price up into what people feel, what the article is explaining, as a possible inflation and inflationary bubbles correct themselves, and people at the top who are like, "Oh, I'm going to be selling my shares off because I've been holding Tesla for a while," are then selling, and the people who are jumping in are possibly going to be losing out or having to ride the long term or shorting for to get something back on their losses. If that's the case, maybe this is reflective on Tesla's sales, but as you saw in the article, they haven't done their annual profits yet. So it's basically stating, is Tesla really worth what the stock value is showing, or are people buying the stock on speculation or hype, or taking their stimulus monies, as it said, as one person was doing, and buying into stocks? So there's that those aspects there on probably for not just Tesla but a lot of stocks. All right, so next article: Bitcoin could be the next big inflation hedge. High-profile investors are concerned about the possibility of rising inflation, and they are turning to cryptocurrency to hedge against it. As reports hit the United Kingdom in mid-June, warning that inflation rates had fallen to a 4-year low. High-profile fund managers are conversely worrying that this COVID-19 stimulus from governments and central banks would ultimately drive up prices. So that's again maybe seeing that people are buying into cryptocurrencies with stimulus money. Not the smartest idea. I'm not a financial advisor. I can't give you financial advice, but my take on it, I wouldn't take stimulus monies and buy into cryptocurrency. Certainly not. So again, but this article is from Cointelegraph, writer Mark Hipperson. Again, I'll have all these links to these articles in the description below on the recap of these episodes of Blockchain and Finance News. So yeah, from Mark Hipperson, like I said. In a recent market outlook, famed hedge fund investor Paul Tudor warned that we are witnessing the great monetary inflation and unprecedented expansion of every form of money unlike anything that developed the world has ever seen. High debt accommodated by money printing is difficult to banish. Inflation expectations could one day respond to this reality. So I've been hearing that a lot about here and there, that the banking is A lot of banks are saying that this isn't the worst we're going to be seeing an economic recession yet. Um, Crispin O'Day, the London-based founder of O'Day Asset Management, also agrees inflation is ultimately unavoidable given the level of stimulus. Right? So there we go again. The word stimulus. In the short term, the money will be made on the inflation bet. O'Day wrote in a recent letter, with potential inflation seemingly on the horizon, investors are looking out for the next big hedge in order to protect assets during the nascent economic crisis. Right? Is Bitcoin the new gold? Jones, for one, has decided a way forward to invest his fund, Tudor Investment Corporation, into Bitcoin BTC. If I am forced to forecast, my bet is it will be Bitcoin, commented Jones in the same letter to investors. Bitcoin reminds me of gold when I first got into the business in 1976. So we've heard that term, digital gold, is what Bitcoin, and you think of it as. I don't even think of it as necessarily like a digital gold. I think of it as technology that can have utility and global currency that solves a lot of transactional fees that carries through banks, even banks utilizing Bitcoin themselves to solve in their own financial needs. Only thing is, you like to see, Bitcoin Lightning and certain technologies implied that allow Bitcoin to be seamless, faster, instant, and very, very low fee caps, like the blockchain, like the Ethereum blockchain, Tron blockchain. Tron blockchain works off of bandwidth, so it's basically free transactions, and it also allows a staking mechanism where people are freezing their Tron, earning Tron for freezing it for voting delegates who are running the Tron blockchain nodes, the trusted sources, in a decentralized fashion, as decentralized as it can be. After the United States Federal Reserve indicated on June 10th that interest rates remain near 0% until 2022, Bitcoin saw a short-lived run past 10,000, gaining 1.6% over 24 hours before dropping back. This happens a lot in the Bitcoin price value up and down the past year. Institutional, not over 10,000, but just kind of spikes like that. And again, people at the top are selling off, holding Bitcoin for a long time. Institutional trading, backed futures, Wall Street futures betting on the GBTC stock. It all kind of compiles together of these analytics. Institutional investment managers have been increasingly interested in all things crypto over the past couple of years, and their interest keeps rising. Recent Fidelity report shows that a survey of almost 800 institutional investors across the U.S. and Europe, 45% of firms in Europe say they hold crypto assets. Fidelity goes on to report the survey revealed higher penetration with crypto hedge and venture funds as expected, but also the financial advisor high net worth individual and family office segment. Consumers are also showing increased signs of interest, with the UK's Financial Conduct Authority reporting that an estimated 2.6 million people have bought crypto assets at some point, nearly double the number reported last year. Easier access. Investors across the board can take advantage of the same trends and realize the benefits of hedging against inflation via Bitcoin, but accessing crypto markets can be extremely convoluted at times, with crypto exchanges charging users hefty fees for the privilege. And over the past couple of years, there has been somewhat of a maturing of crypto markets. Now more consumer-friendly, easy-to-use platforms have been set up, providing immediate and safe access to the best price crypto. Users of these platforms can benefit by instantaneously and effortlessly changing their money into digital currencies at competitive prices, monitoring their balances in real time. So, in one regard, easy up access. Right in the link below on these, I have a link where you can shop and earn Bitcoin for free, and right through Cash App, you can store your Bitcoin right on the Cash App as well. So I have links for those if you want to get into earning Bitcoin for free. You don't want to go onto exchange and buy cryptocurrency necessarily, but you want to, maybe check out, you shop on Amazon, maybe shopping on not say Amazon, but say Oakley, right? Oakley, for example, or Petco or Staples, GoDaddy Web Services. I've seen on Lolly, so you can shop for those services and those products with Lolly, many thousands more as well. and you can earn Bitcoin based on using the Lolly wallet plugin. And you can store that in a cache. So I have links for those on the description below. Um, so I'm going to jump on. So basically, it's a little bit about the hedging on Bitcoin speculation as an inflationary hedge. We got two more articles here. Former Wall Street trader seeks to make sense of the crypto world. So this is from Bloomberg. Uh, this is by Ladonna Azaric. Hunter Merghart comes from a traditional finance background, having spent over a decade on equity trading desks in New York and investment banks, including Credit Suisse Group, AG, and Barclays PLC. But like many of his peers, he became interested in the crypto market and made the transition to that world in 2018. Really, in his words, I really saw it even then as a new emerging asset class and market to develop. Says Merghart, 36. At age 36, he joined Luxembourg, not at age 36, but at the time of his quote here. So he joined Luxembourg-based Bitstamp, one of the oldest cryptocurrency exchange, as head of U.S. operations in April 2019, helping to open its New York office. The coronavirus has forced his New York team to work from home, but he says they're keeping up with the ever-evolving trends within the crypto sphere. Falls as a condensed interview on key themes Burkhart and his team have been clued into. One, what clients are asking. Bitstamp has more than 4 million users globally. When Merghart speaks to clients on the institutional side, he's asked about how they can more efficiently trade on the exchange and how Bitstamp can offer regulated derivatives. For retail investors, the demand is a bit different. They want to explore the ecosystem and find a way to participate and often ask for easier access in various crypto products. So basically, like I was saying, like Lolly, earning Bitcoin, exploring it, earning it for free for shopping, and you're owning Bitcoin, which many view it as the digital gold. I view it as golden technology. It's digital. So for us, it's okay. Let's think about high quality assets that we can offer to retail in a regulated manner. He says we're starting to see movement on that in the US, but retail in general wants to explore this just like they wanted to explore the early days of the internet. Just how do they get trusted counterparties to do that with? Two, on potential implications of CBDCs. Some of the world's major central banks teamed up earlier this year to access the potential development of their own digital currencies, argument that gained steam as policymakers try to keep up with new crypto and blockchain technologies. Proponents argue that CBDCs, as they're known, could allow for the creation of a digital form of fiat money that could become widely available to a large swath of users, which is also what Bitcoin covers. I'm not a financial advisor. Can't give you financial advice. Do the due diligence of your own research and only do what you're most comfortable with. And do a lot of research, most definitely, especially in this market or in all marketplaces that involve finance, fintech, cryptocurrency. So they might have a place in the world, especially if they help expedite the movement of money between users and across borders, said Merghart. Maybe as a stop-gap solution, these central bank digital currencies could be a good solution. China has begun a pilot program for an official digital version of its currency. We've been hearing that for a bit so far this year. Bloomberg News reported some proponents say it could bolster the government's power over the country's finance system. Merghart cites privacy, putting everything on a centralized ledger could mean a lack of privacy on transactions. The blockchain or other distributed ledger would not be required or useful, even though they were the original inspiration for the concept of this. So there is an aspect of privacy features within cryptocurrency and blockchain-based technologies that could be a monetary value of currency, and it could be a monetary value of currency, and such as Chinese currency having a blockchain-based asset that is privacy ridden. So maybe they have implementation for some certain transactions that could be privacy based. On the on the rise, stablecoin usage. Right? So in the third point on the rise in stablecoin usage. So stablecoin is like USDT Tether I was noting of that's pegged at $1 or floating around 99 cents. Stablecoins are tokens pegged to other assets that are designed to be less volatile have seen an increase in usage in certain corners of the market. Burkhart has a simple answer as to why that might be happening. its ease of use. So once you see the Gemini dollar is pegged to a dollar, the Gemini dollar is backed by whatever their asset revenues are of issuance um, that's pegging it to a dollar. Or I'd have to look into more Gemini dollar. What obviously utility of store of value that can put it in whole dollar numbers for yourself. That doesn't move is pegged to their own assets. I would assume. I would have to read into that myself. Um, like the U.S. dollar. He cites examples of stablecoin usage overseas where they're used to move money between countries in an expedited way. You don't have to deal with multiple banking partners, multiple bank accounts. You just have to deal with the stablecoin, maybe the issuer of that stablecoin. He said the ease of use is pretty phenomenal. So basically, again, I was saying like Gemini dollar or USDT Tether. USDT Tether is the bigger one, the one that's on multiple chains: Ethereum, Tron blockchain, Omni protocol, the Bitcoin-based protocol. It's not on the Bitcoin blockchain, but it's based off the Omni layer protocol. So um, Gemini dollar obviously is minted on the Ethereum blockchain. It's through the Gemini Trust, Gemini Exchange from the Winklevoss twins. And USDT Tether is another project that is the bigger one. The final news article I have here, I'll be closing out the stream for the day. Ivan is about, hey, hello, what's up, KinToshi? Not much, just doing some finance, tech, blockchain news, and I will be closing the stream out, and a little later I'll be having a PUBG Mobile gameplay. This is going to be happening every Sunday for about 15 to 20 minutes, reading through stock, fintech, blockchain, cryptocurrency news week to week. Jack Ma's fintech giant tops 1.3 billion users globally. This article is from Join Extra Crunch. Rita Liao is the writer. Speculation that Alibaba's fintech affiliate Ant Group will go public has been swirling around for years. New details came into light recently. Reuters reported last week that the fintech giant could float as soon as this year in an initial public offering that values it at 200 billion. As a private firm, details of the payments financial services firm remain sparse, but a new filing by Alibaba, which holds 33% stake in Ant, provides a rare glimpse into its performance. Alipay, the brand of Ant's consumer finance app, claims to earmark 1.3 billion annual active users as of March. The majority of its users, users came from China. Well, I see in the chat there, when am I going to stream? I'm streaming right now, but I'm going to be streaming later. The majority of its users came from China, while the rest were brought in by its 9 e-wallet partners in India, Thailand, South Korea, the Philippines, Bangladesh, Hong Kong, Malaysia, Indonesia, and Pakistan. In recent years, Annie has been striving to scale back its reliance on in-house financial products in response to Beijing's tightening grip on China's fledgling fintech industry. Tencent, Alibaba's nemesis. Speak of playing PUBG Mobile a little bit later. Tencent, the company that's behind PUBG Mobile, game I love. Alibaba's nemesis is considered a lot more reserved in the financial space, but its WeChat Pay app has been slowly eating away at Alipay's share of the market, the payments market. A symbolic move in May, the Alibaba affiliate changed its name from Ant Financial to Ant Group. Even prior to that, Ant has been actively publicizing itself as a technology company that offers payments gateways, and sells digital infrastructure to banks, insurance groups, and other traditional financial institutions. Rather than being a direct competitor to them, on Alipay app, users can browse and access a raft of third-party financial services, including wealth management, microloans, and insurance. As of March, Ant's wealth management unit facilitated 4 trillion yuan, 500 Ant's wealth management unit facilitated 4 trillion yuan, $570 billion of assets under management for its partners, offering money market funds, fixed income products, and equity investment services. During the same period, as of March, Ant's wealth management unit facilitated 4 trillion yuan, $570 billion of assets under management for its partners, offering money market funds, fixed income products, and equity investment services. During the same period, total insurance premiums facilitated by Ant more than doubled from that the year before. In June, Ant's new boss set the goal for the firm to generate 80% of total revenue from the technology service fees, up from about 50% in 2019. He anticipated the monetary contribution of Ant's proprietary financial service strength result. Ant grew out of Alipay, the payment service launched by escrow service to ensure that between e-commerce buyers and sellers. In 2011, Alibaba spun off Ant allegedly to comply with local regulations governing third-party payment services, and has since taken on several rounds of equity state founder Jack Ma voting interest. So that's what I have. So that's the news for today. And basically, if you're on the YouTube side watching, please do subscribe, smash the like. I will have the recap of this out soon. Get in the thumbnail, in the episode, and definitely, if you want to do shopping, want to explore Bitcoin, you can use the Lolly app down below, as well as store it on Cash App. I have the links for that, and check it out. All right, I'll see you next time on next Sunday. Ciao, ciao. Peace. Have a great and kind, safe Sunday wherever you are.